Comcast moving higher today on news of Nelson Peltz's Trian Fund Management taking a 0.4% stake in our parent company. The firm making the move on the belief that Comcast's shares are undervalued, according to my sources. For more, let's bring in Craig Moffett from MoffettNathanson, covers the company, likes the stock, has a buy. Craig, some may wonder, the stock's trading at a record high, and Brian Roberts, chairman CEO, has been lauded for his leadership. How much is it really undervalued? Do you agree with Trian?
Well, yeah, no, I do think it's undervalued. And the question is sort of, beauty is in the eye of the beholder here, right? I mean, Comcast shares have actually done very well relative to the S&P 500 over especially the last 10 years. I think they're up 6 times. The problem is they are up so much less than comps. And Charter over the same period, for example, is up 16 times. And so, as I say, beauty is in the eye of the beholder. Is that good performance, or is it a good business and poor performance relative to the quality of the business? And that is a rich debate. You can imagine certainly that Comcast shares would be a lot higher had they not made the investment particularly in Sky that they made now about a year and a half ago, that they paid in retrospect much too much for.
I'm told by sources so far talks are constructive between Trian and management. What do you think is the play here?
Well, I think the home run, if you're a shareholder, would be that Trian gets them to break the company into pieces, which, may not be that much to ask at the end of the day, right? Even if it's just into 2 pieces, if there's one piece for cable and then a separate piece for the Sky business plus NBCU, it's not like that would be giving up anything of any real value, and you would almost certainly get a higher valuation if you saw them separated. So I think that's what a lot of shareholders would like to see. I don't know exactly what Trian is asking for. It could be that they simply want to see more share repurchases, or you could argue they simply want to shine a light on the fact that Comcast is an undervalued stock.
One can only imagine as well, Craig, the multiple that CNBC would get as a standalone company as well. We're talking Tesla-style numbers.
Astronomical.
I'm sure. But Craig, being serious, do you think that the controlling voters, Brian Roberts in particular and family, want to do this? Because, as you pointed to, only recently made acquisitions. It doesn't seem to suggest that they'd be open to trying to break things up.
Well, again, breaking things up doesn't necessarily mean breaking up and selling. It just means having 2 separate stocks instead of 1. And again, that's sort of asking them to give you the sleeves from their vest. It doesn't actually ask them to do anything. Brian Roberts, as the controlling shareholder, would still presumably have the controlling interest in both companies at the same equity ownership. So. But you're right. You can't force Brian Roberts or Comcast to do much of anything. And Trian has, 70 basis points of ownership at this point from what's been disclosed. That's not enough to force anything. And the Roberts family has a non-dilutable 33% vote and then some common shares on top of that. So it's tough to force them to do anything. So it's not a surprise that, at least initially, they're doing this with constructive conversations, and their interests are aligned. At the end of the day, I don't think anybody would argue with trying to see the stock price go higher.
What about the idea that some of what's been dragging on the valuation in the stock lately has been, and Kramer made this point earlier, somewhat short-term in nature, some of the near-term headwinds with COVID, for instance, being exposed to theme parks?
Yeah, look, that there's no question about it. It's both COVID, or it's both theme parks and the movie studio. It's bars and restaurants at Sky. There's no question that they have struggled with the COVID crisis and have found themselves in businesses that are very much exposed. On the other hand, even over a very long period, 10 years, say, the capital allocation questions are still there. They paid an enormous price for Sky. We did an analysis early this summer for our clients that suggested that they paid 16 times for Sky. It's probably worth 6. It's not. I'm not saying Sky is the same business as DirecTV, but it was striking to us that the value destruction in that transaction is probably about the same as the value destruction in the DirecTV transaction, which some people would say is one of the worst transactions in American history. And that just speaks to how much they overpaid for that asset. So there are legitimate questions, I think, about that go beyond just the COVID exposure of these businesses.